Harry Dent is a notable macro strategist who has predicted many things correctly and nearly spot on over the years. Among the most notable were the dot-com bubble in 2000, Japan's economic collapse in 1989, the populist wave that elected Donald Trump, and most notably back in late 2017 he was predicting a massive collapse for markets worldwide that would happen in early 2020. Today I'll look into what he is saying will come next, so stay tuned. Hi everybody, welcome back to The Contrarian. My name is Logan. I really like to talk about overall success as well as investing, and also, as the title suggests, going against crowd thinking and crowd thinking mentality. So if you like these kinds of topics, just consider subscribing. I also want to make a disclaimer that none of this is to be taken as financial advice. I'm not a financial advisor, I can't give financial advice, and don't take any of this as advice. To begin with, it's important to understand Harry's background. Harry S. Dent Jr. is the son of a macro strategist for 3 U.S. presidents, most notably Richard Nixon, so you could say that this runs in the family. Over his life, Harry has made predictions based off of many factors outside of the economy, such as demographics and geopolitical changes. And based on these factors, many of his predictions have been correct, both in the event and timing. Many people make predictions that are way off in timing, and this just makes it hard to trust what they are saying. For example, Peter Schiff was predicting, for 20 years he was saying that the markets would crash due to, the debt burdens that Harry Dent is also seeing as issues, but however, he was way too early with all of his predictions. So it's just very, it is important to get the timing right, is what I'm saying. Sure, it could be true that this eventually happened, but the timing was just way off. It's definitely important to take into account what many different factors are suggesting, and this is what Harry fits in differently. Many investors just look at the economy and only the economy. Harry looks at a lot of other variables as well. Under his HS Dent Publishing, he puts out a monthly newsletter as well as a free daily newsletter. He also has a YouTube channel where he regularly uploads his take on recent economic events, so that's where you can follow him if you want to. Now, he was correct on the initial popping of this bubble in early 2020. Basically, the reasoning he gives for this is that anything out of the ordinary could have popped this extreme bubble in asset prices. In an interview, he spells this out. How would you characterize what's happened in the economy and markets? This is a detox from a crack-addicted economy with debt and crazy financial asset prices. The coronavirus was a perfect trigger. Money printing will stop most things in its track temporarily, but it didn't stop the virus. We've basically been blowing hot air on a cold economy. Now we've gone into an instant depression. Now this was back in early May, and since then things have gone somewhat differently than what he was saying back then. Well, somewhat. The stock market has rallied on the quantitative easing and the stimulus that the Fed continues to do, but the real economy is already in a depression, like what Harry was talking about. When asked about when the economy could begin recovering, he gave this response. The economy will get healthy and grow again once you deleverage debt and financial assets. That will clear the decks and get rid of zombie banks, zombie companies, and unproductive loans. So effectively, Harry sees nothing majorly different than what other investors see who I have covered, such as David Hunter, Michael Burry, Peter Schiff, and Jim Rickards. They've all been saying that we're in asset bubble, and some of them, like Peter Schiff and Jim Rickards, they've been saying this for a very long time. Really, the only way out, according to all these people as well as Harry, is to let this bubble pop and let all of this debt deleverage. Let all of these zombie companies and zombie banks go bust. Now, with all of this, the obvious question is, when do I get out? When's this bubble going to pop? Back in May, Harry was predicting that it would pop in the fall of this year. As well as somebody like David Hunter, he was also predicting that it would pop a lot earlier. Now he and Harry Dent have moved their predictions back to early 2021. They're saying that this is more the time frame when this finally peaks, when this asset bubble finally peaks. Back in May, Harry was saying this, Stocks are rebounding with all the stimulus, and because investors can see that the virus is receding, this rebound will last a month. Markets probably won't go up a lot more. They'll probably correct some off and on. I'm guessing that in August they may peak, maybe last until October. He also recommended if you're in stocks, just sit there and ride this thing out. You may be able to get 5 or 10% return. Now, if you watch my previous video, David Hunter is in fact predicting that the S&P 500 will hit 4,500 before crashing 80%. So he is much more short-term optimistic on the markets than Harry Dent. So with all of these predictions and advice, all I'm trying to show you is that you might want to watch out around the end of this year. In fact, if the stock market rallies to all-time highs and moves parabolically higher, to 4,500 in the S&P 500, or maybe even higher than that, that could be a perfect time to get out. Now, none of this is advice, and I'm not an advisor again, but the writing is on the wall for the biggest market crash, potentially in history, with everything crashing. Stocks, real estate, bonds, possibly even gold. Harry is one of the only people predicting that gold will fall too during this deflationary crash. Now, I'm sure that crowds will be running into the stock market, real estate, and gold as they see it rallying higher and higher in a parabolic manner. We're already seeing this with a company like Tesla. I posted a video a couple of weeks ago about Tesla and how it could be overvalued right now. I didn't even say that I thought it was a bubble. I said, you should look into it. It might be overvalued. And it is the most disliked video I've made as of yet. I've talked about Trump. I've talked about face masks. I've talked about things that I thought would be so much more divisive, but I guess Tesla right now is very divisive. There's a lot of crowd thinking going on with that, obviously. Just people mindlessly running after that, saying that it'll go up, 100% more on the rest of the year. And it might still keep going up, There's no telling how far this bubble will go. So sentiment at the end of this year will be anything but negative when this market finally does peak out. But you want to be a contrarian. You want to stay out of this mayhem that is starting to happen and that is going to accelerate if the markets continue to rally. Now, only time will tell when this bubble pops, but it is going to pop. I think that this is just the takeaway message, from everything that I've talked about recently, what Michael Burry is saying, what David Hunter is saying, and now what Harry Dent is saying. I think the big takeaway is just that this bubble is going to pop at some point. It's inevitable. It could go on for another week, another month, another year, potentially, however long, but it still has a way to fall. What we saw back in March was not the end of it by any means. Now, this presents a great buying opportunity, as I've been saying as well. If you can get in at the bottom, or you don't even have to get in at the bottom. If it falls 80%, you could get in anywhere near the bottom, and it'd be great. You could buy a home for much less than what the real estate market is currently offering. You could buy, stocks, potentially. I don't know if I would look into buying stocks, just because it might be a long time before they really recover that much. But yeah, there's just going to be fantastic buying opportunities when this bubble finally does pop. And even though there will be short-term pain because of this bubble bursting, bubble bursts always lift up the lower and middle classes of society. Historically, that's always what happens. And they always give them a larger piece of the economic pie. So you guys, if you're in these lower classes, I'm sure probably all of you are, you really have the opportunity to have this really grow your long-term wealth. So this is not a pessimistic video by any means. For me, this is actually kind of an optimistic video. But anyway, let me know what you guys think, and I hope to see you again.